Hey, and welcome to the Evolution Real Estate Podcast, where the evolution never stops. A Friday edition with Scott and myself. We were supposed to do this yesterday, but had a little audio technical difficulty, so we pushed it to Friday. Happy Friday, Scott.
Hey, happy Friday, Justice. Happy Friday, everyone.
So, if you're meeting us for the first time, my name is Justice. I'm a loan officer. My job is to help you get a mortgage, the financing side of getting a home. And I'll let Scott do his intro, but the idea of our podcast here is just stuff we're talking about on a daily, weekly basis. And we figured why not film it and put it on live so people can interact and or make fun of us along the way. So Scott, go ahead and give an intro about you.
Yeah, hey, it's that happens a lot being made fun of. So, my name's Scott Ebel. I'm a real estate broker here with Greater Midwest Realty, and just super excited to be here today to share some of the stuff that we're going to go through. It's been a little while, been a minute since we've updated or kind of shared some of the what's going on with the market, and so I'm excited to do that today, and we're going to take it a step further and walk through a purchase agreement. So I'm pretty excited about that today. And then I know, Justice, you've got a lot of things that you're going to talk about with what's going on with the rates and bond market and what have you, correct?
Yeah. I mean,
there's stuff going on.
There's a lot of information, and it's not all great, but it's what we're in right now, and we'll see how that pushes forward going, down the way. But it looks like we got a Wayne Sanders wants to say hi to you. Hi, Skip.
Oh, hey, Wayne, how you doing? How's Texas?
Ooh, Texas. Oh, I bet it's actually warm there. God, we'd take some of that weather. Yeah,
exactly.
Cool. So, Scott, I guess what's been going on with you since our last episode, since we've had a few weeks off?
It's been crazy. Been working with a lot of buyers as we work together here and continue to push forward, but it's been crazy for buyers, and that's why we wanted to kind of go through a purchase agreement today, talk about the rates, and really update everybody on what's going on in the Twin City market here, which is pretty similar to what I think is going on across the country. Just really been working, showing a lot of homes, writing a lot of offers. Not always winning, and that's what we'll go through today. So some of the tips, tricks, and ins and outs of what's going on with trying to get an offer accepted nowadays, because it's vastly different than it ever has been, and it continues to evolve and change all the time. So that's what I've been doing, just running around, looking at houses. And how about you? What do you? I know you've had a lot going on. So what's going on with you?
Yeah, so fortunately, I don't have to run around for my job, so I, park my butt down and I can work from anywhere. So, traveling a little bit, and then I had a broomball tournament national, so we had that. If you don't know what broomball is, look that up. Go to Broomball Central. You'll get plenty of information there on Facebook. But we had the broomball stuff, and so now that's done, now golf season starts. So when the weather comes, Wayne, you can bring that nice Texas weather up to us so we can start golf season up here, because we're still waiting on that.
Yeah, it might be a while. Might be a while. There's still ice on the lakes.
Yeah. Okay. Well, we won't dwell on that. Let's get to the good stuff. The high quality, good news stuff. How about you talk about, as we do, the market update of the Twin Cities area?
Yeah, I'll go ahead and let me go ahead and share my screen and we'll get going here. See what we can share with folks. So just let me know once you can kind of see my screen.
There we go.
Should be up there. So this is it's from InfoSparks, and it's information that we get on the MLS. And I always like to share this as far as what the past 3 years, that's what this graph indicates. And then it's a rolling of month to month. Now the indicators and where we're at right now, it just goes through March. Very soon here, after a few days, about the 4th or the 5th of the next month is when they are able to update from previous months. So April will be showing up on this graph very soon. Nonetheless, indicators of where we've been and what the numbers are. So homes for sale, we definitely have an uptick. We've got a positive number from even last month as you can kind of see, and we start to get into the spring market here. Last month in February, the homes for sale were about 4751, and now through March it was 5312. So that's a good thing, especially for buyers in the market. It's a plus of 561 homes just here in the 13 county metro area. So that's kind of where we're at for numbers, and we always kind of look at that because that really kind of tells a tale of where the market's going to go and what's going on. So another leading indicator is always closed sales. So I'll share that. As you can see, there's been somewhat of an uptick of 4,013 homes that have closed through March for the month of March. And as you can see, in February, it was only 2,869. So it's pretty good incline and positiveness there as well. I think that's a good thing to watch here. Months of supply. This one's just been amazing to watch and to see where it's at.
It's actually up
right now. I know, even 1 month. So we've talked about this in previous podcasts, right? Is where a balanced market is of about 5 months of supply. That's what's considered a balanced market for both either the seller and or the buyer, right? To have kind of equal playing ground. As you can see, we've been nowhere near that all the way, even going back to 2019. I mean, you can see 1.8, I mean, at one point we were only to 2.7 back, in late or mid.
which looks so high
those
from
are
now.
summer
It
months.
looks like a peak.
It is, and that's all the way back to June of 19, pre-pandemic, and you can see some of the numbers of what happened after. It's kind of getting into now I think we're right here, 20. You start to it just drops off months of supply, and it's just pretty much stayed there. So where it's going to go, that's a leading indicator, and we just need more homes on the market. And as I just showed, we're starting to get some more definitely coming onto the market. So talking about that, moving on to new listings. Now these peaks and valleys. Here's December up here. Obviously, we're very seasonal with the winters, and home sales definitely fall towards the holidays or right after the holidays. So that's what these valleys are, and that's what they pretty much traditionally, as you can see over the last 3 years, December is our lowest month of new listings anytime, and then thereafter, subsequently, we always rise as it shows in the last 2 years, and again following that same trend this year. Now we're in February, we're at 4515, and now just as of March, we're at 6528. So that's a great jump to see that people are taking the leap of faith and saying, you know what, we're going to start putting our house out on the market, and we're going to make it happen and take advantage of the market. And that helps buyers, right? Just allowing more homes just to look at. So,
And how's that compared to last year?
So last year, here's March of 2022. We're through March 6528, and we will look at. So March was
it's actually down a little. Okay.
Actually a little bit lower.
Huh.
Yeah, actually a little bit lower, but it's working its way through. So we'll see. It'll be interesting to see what happens. Seems like it's been better into April. So yeah, so it's actually a little bit under. It's here it says after month, it's 3.1% lower. So is what that is from. I think that's what it equates to. So so that's kind of our market. That's where we're at right now. Any questions or anybody online? Anything we can talk further about? Otherwise, I think you want to talk about bonds and some interest rates. That's always another hot topic to talk about.
Yeah. Yep. Well, Wayne left us. He went to the beach.
Did he? We should go with Wayne. That's where he went to the beach.
Wayne's got stuff figured out. Wherever he's at, he's going to a beach.
He's in Galveston. Yeah, he's down on the. Yep, he's got it figured out. You're right. So, Wayne's a good friend of mine, a very good friend of mine. So I went to college with Wayne. So always great to have friends pop in and say hi and check us out. But I get it. When the son's calling, he's got to go.
Yeah.
So I'm going to go ahead
Yeah.
and give it back to you for a minute because I think you want to share some rates and bonds and some of the stuff that you do so well.
Yeah, let's look at the pretty chart. So, not really pretty, but let me move this up slightly. So when we're looking at this, we're looking at Freddie Mac's website where they're publishing the rates, and I just kind of made the chart go from the beginning of this year to now, uh, and you can see how pretty this chart is if you are not buying a home. I mean, it's not great, right? So we went from
Yeah.
roughly 3%. Now we're at 5. So in a 4 month time frame, we've gone up, 2%, which obviously indicates that hurts home buyers wanting to qualify for homes because that 2% will equate to a lot of extra payment, like extra interest, and it's really kind of put a little stagnation into uh, our home buyers because a lot are turning to rent. We know rent is high. The one thing about rent is it's 100% interest, where this is an interest rate here, but rent you're not getting any equity, so something to keep in mind if you're thinking of that route of renewing leases and whatnot. Um, but historically, we always say historically, uh, rates are averaging like 6.8, so we're still below that. The caveat to that is home prices are higher than they've been. So the the thought is that these rates will come down. They'll come down to the threes, but it could be a year or two, potentially even three, where we'll be back down to the threes. So I'm kind of telling clients, anyone who's buying in 2022, they're going to be more than likely refining in the future. So just expect a call from me. Uh, the other thing to look at is this bond market. So this is not an exact science, but this is what we look at to see it somewhat correlates to those charts just to kind of see what is going on. So if we zoom this back to, let's just go right there. So we can see 2022, we saw the chart here, how it's gradually inclining. Look at the bond market. Oh, it's inclining as well. And if we zoom into this bond market in the last 5 days, you'll be able to see we've kind of been a little bit all over. So we try to time it where we lock some people here at the bottom of that little valley, but you can see overall this trend is still going up. So we expect it to continue to go up, um, with the idea that rates could potentially hit. Now the actual rate could potentially hit even as high as 6 at the end of the year. Hopefully we don't get that far, but some programs like first-time homebuyer programs and whatnot have already exceeded that. So just something to keep in mind when you're looking forward to pre-planning. If you're looking to buy this year, it's definitely something you want to set up a budget and go over with your loan officer just to make sure that you're set up correctly uh, with your budget to make sure things are good to go for your qualifying. What are your clients saying when you're sending them out and they're like, "What rates? Is that real? What's going on?" Like what have you been telling them?
Yeah, I mean, it is what it is, Justice. I mean, obviously, some folks I think are getting a little more priced out of the market, and or it takes away their buying power. There's no doubt about that. But here's the thing: the bottom line is that if you need a home and you can afford it and it's well within your budget, rates are still great, right? Historically, it's now
Mm-hmm.
we got kind of spoiled from the previous last 3 years and beyond, or if not more. But really, it's about getting into the market and needing and wanting a home and just buy it.
Yep, yep.
So we don't have, as far as on my side, I don't have that big of a, you know, it comes into play. It definitely is a factor. When we send them back to the loan officer and say, hey, what do you got for numbers or where they're at and what's that payment going to be? Um, Definitely is a conversation, but I don't think that it's right now, at least with the folks that I'm working with. Obviously, they'd love to have a lower rate, but it is what it is, and as long as they can still afford it, they need to get into a home because who's to know where it's going to go? right? It
Right.
could even
Yep.
continue to go higher, and get worse. And yeah, so
Yeah, I mean,
that's
working with a lot of clients who like in December thinking, rates had gone up into the threes from the mid twos. They're like, can't. I'm gonna wait. I'm gonna wait for them to come back down. Now they're kicking themselves. They call and you talk to them, you're like, sorry, it's in the fives now. So
yeah.
it's a lot different. But yeah, you're right. I mean, our recency bias towards absolute historically low rates put on by a pandemic, which hopefully we won't see something like that again in our lifetime. Obviously, it was a little bit of a scenario where like a perfect storm kind of thing for that to hit.
Mhm.
So I've always said if you can get a rate in the fours, you're doing okay. So fives is not too far off from that. And financial planners usually say if you can get a rate below 7% on a house on anything, that's a good rate. So,
Right,
talk to your financial
right.
planners and they'll back that up. Anything below six is still pretty good. Um, so, speaking of
It
that,
definitely is.
because one of the things I'm thinking about on that purchase agreement, which you're going to go over, is like there's a line in there, something about, if the interest rate goes above this and stuff. So that might be a good transition point for you to kind of roll through this purchase agreement.
Yeah, so I don't know if let me make sure. Can you see my screen? Um, are you able to see my screen, Justice?
There it is. Yep.
All right. So this is a Minnesota Association Realtors standard purchase agreement. This is what we use for single family homes, 1 to 4 units. So basically what I want to kind of do is talk through the differentiation of a purchase agreement and really how to fill one out, what it looks like. Now, of course, your real estate agent is going to take care of all this, but there are some things that we really want to highlight and talk about, that are somewhat different than what it's been, and that's what we'll go through. So just kind of starting off on the top. Line one is the date of the purchase agreement when you're making your offer. It starts there. Line three is your legal name and how you want to take legal title. I always recommend to include your middle initials, as Bob Johnson there maybe, or Amy Smith or whatever. It's always a good factor or good consideration to include your middle initials. So on that, I always try and do that. Line five, this talks about the earnest money. That's consideration, right? And so what that is, just basically it's spelled out here, and then and the dollar amount. We're kind of different, I think, than other parts of the country. Pretty acceptable on our average home price is mid threes, 350 now, 354, somewhere in that ballpark. And it's entirely up to the buyer's discretion of what they want to offer for consideration, and that's what this is earnest money. Whether it's $3,000, $4,000, $5,000, or more. It's totally at their discretion, but that's what's entered into this line number six. Line number seven talks about how it shall be delivered, or who it goes to, or who holds it. And typically, earnest money, when a buyer writes out an earnest money check, or sends it with this purchase agreement, and the purchase agreement becomes accepted, right? It is typically, now this too is negotiable, but typically is held in the listing, as it mentions here, listing broker's trust account. That's where it's held, and needs to be there within 2 days after final acceptance. Doesn't matter about any contingencies, inspections, what have you. Once you get your purchase agreement accepted, those monies or that earnest money should be sent over and deposited into that listing broker's trust account. Like I said, it can be negotiated. It doesn't have to be money. I mean, it could be a diamond if you wanted to, as long as both parties agree. So that's earnest
A
money.
chicken? Could you be a chicken?
Yeah. What's that? Yeah, it could be a chicken. Sure, why not?
Oh, okay.
Yep.
All right.
Yeah, why not? Could be a goat. Um,
Tom
yeah,
Brady?
absolutely. Yeah, why not? So it truly could be. Line 12, that's the legal address, or the street address, and then it goes on to the city, state, where it's at, and then legally described as far as the property. Okay, so that's the property that you're making the offer on. Um, Line 16 through 32 pretty much talks about the fixed items, if you would, different items. And you can kind of see the playset, the storm sashes, windows, screens, awnings attached. A lot of those commonly affixed personal or items that go along with the property. We call that, this is boilerplate for the most part. It's already fixed into the purchase agreement, but it covers a lot of the items that will come up or should need to be addressed when purchasing a property. Okay. And then line 34, 35, notwithstanding the foregoing lease fixtures are not included. So it talks about some of the items of may be leased that are not owned, could be addressed in there. Line 38, here's the line that it spells out, hey, this is what we're willing to offer, right? And that's where it spells it out there. So whenever you put an amount in there, then it would write it out just like a check down below on line 39. 40 through 45 or 46, that's has to do, what that addresses is the type of financing or how it's broken out, right? The buyer agrees to pay in the following manner. So line 1 is predominantly for cash, whatever amount of cash or skin in the game that the buyer will bring, which includes earnest money, as you can see here. Line 2 is the financing, a percentage. So if somebody is going to put 5% down, it would be 5% cash, including earnest money, and then, or approximately thereof, and then the 95% to be financed. Or if someone's going to put 20% down, that's how that's spelled out. So you would just fill this out. The assumption, assuming seller's current mortgage, that's for an assumption. Line 3, if that were what's commonly referred to as creative financing, and that's what that line. So typically that's, if it's a straight out purchase, it's going to be a percentage of cash that they're bringing or they're going to put down, and then the mortgage amount that they're going to finance. Line 45 or item number 4 is now, as you can see, it's for contract for deeds. So and then subsequently there would be a purchase agreement addendum that spells out that type of financing, the contract for deed. Line 48 is actually the closing date in which you propose to close. Most of the time, depending on if it's financing, we can get them done in 30 days. There was a point where, oh boy, about 3 years ago, or more, well, it's actually more than that. I date myself, but trying to get, and I'm trying to think here of Dodd-Frank and some of the other things that started to come into play. Actually, it was much longer because that was after, 2011, 2012. So yeah, that was 10 years ago. But after
close.
that, trying to get a purchase agreement accepted and closed, you know what I'm talking about, Justice? I mean, to get something done in 60 days was almost a miracle.
Yeah.
Yeah, but that's not a problem anymore. Traditionally, you definitely can get something closed, within 30 days to 45 days. That's kind of a rule of thumb or general ballpark or window of opportunity to push out of when you're expecting or going through a purchase agreement. How long before we could close? And that's about enough time to be able to get everything done with traditional financing, right? Any questions or anything to this point? Moving on to page 2.
No, yeah. Keep it rolling.
Okay. Once again, line 49, that's just the date of the purchase agreement when this purchase agreement was filled out. Line 50 is once again spelling out the property address, refers to the property address that you're buying. Now getting into the financing, mortgage financing, and line 52 is or is not subject to mortgage financing. So that would be, if it is, it would be checked. If not, you're checked here. And then it spells out what type of financing there is. Mortgage financing selected below. 56 is mortgage, first mortgage only, or first mortgage and subordinate financing. So I don't know, Justice, you probably don't see a whole lot of purchase agreement with subordinate finance other than first-time home buyer money and some of those things. Maybe you can touch on that quick.
Anytime you got first-time home buyer money. So there's a program in Minnesota called MHFA. So with that one, it comes with deferred or monthly payment subordinate financing. So that one would be checked and along with number 57 would say does, and then in the does you'd put like which program, MHFA startup, MHFA step up, that kind of thing. So yeah,
Right.
that you
Let's put it
typically will
here.
see that. Typically see that
Yeah.
with a lot of the first-time home buyers I work with that have some sort of down payment assistance.
Okay. And that's where that spells it out. Perfect.
Hmm.
Moving on to, so on a, if it were to be just the first mortgage and or this other, with subordinate financing, there's different programs, right? Different type of financing, but these are the most common. You've got conventional, you've got DVA or VA for veterans that have their eligibility. And then you've got FHA and then USDA and as we kind of touched on just a minute ago. So depending on the type of qualification and or financing that the buyer is going to receive, that's appropriate box would be checked here. So that's that. Earlier we were talking about, line 65 mortgage in the amount said purchase agreement, amortized over so many years. So whether it be a 30-year mortgage, a 15-year mortgage, what have you, a 10-year mortgage, whatever somebody, but commonly it's going to be a 30-year or 15-year, pretty much of the time,
Hmm.
with an interest rate not more than, and what sometimes I've seen a lot in the past, people put market rate. Well, that doesn't really, the big thing about that is that uh, people don't have unlimited funds or unlimited qualifications. Maybe they do.
Hmm.
But if they don't, or if there's a window, and now, as you were talking about before, with interest rates rising, some buyers and prices rising, some buyers are pushing up against their upper limits, right? Their
Hmm.
debt to income and some of the ratios. And so it does matter for qualification and or as an escape clause later on that say that they're qualified and you ran their numbers, Justice, at say even 5.5%. And all of a sudden we're out looking, but it takes a while and they don't lock or they don't get an accepted purchase agreement. Thus they wouldn't be able to lock their rate because you need an accepted purchase agreement to lock your rate. But if it were to go above that 5.5%, say 5.75, now that's a big deal. That's very important to pay attention to this, correct? I mean,
Hmm.
is there something you
Yeah.
want to
Oh
share
yeah.
about that? I mean, that's where the interest rate really should read a percentage. It should be indicated.
And what's your process on figuring out that number?
Well, and that really has to do working closely with the loan officer, with you guys, someone like
Hmm.
yourself, and saying, hey, what rate, where are they at? Right. And then from the pre-qualification, we always, have that idea of where they at. Now, could they, and I kind of asked that question. So um, I don't know, maybe there's some tips or tricks that you can share of how much wiggle room, and that's really about that team and the conversation that
Yep.
we have,
Yep. Hmm.
to know where people qualify and no, they're good, they've got some room, or you know what, hey, we're bumping against that right wall, and if you push it too much further, this could enact and be an issue, right?
Yeah, that's where the importance of working with a loan officer and a realtor that work together and familiar with each other comes in handy quite a bit. So like one of the things I do is give out the "you are pre-approved" email, and it gives a lot of information on clients on kind of the numbers and what we're looking at and the figures. So that way, who the agents I'm working with, they know like if we're pushing up against tight numbers, maybe we got to check that border. If they're like, oh, they got plenty of space, that interest rate obviously wouldn't be as much of a factor. So just
Right.
having that
Right.
information up front is very helpful.
Well, and I think years ago when we were down, interest rates were in the twos and the threes and what have you, it was not as big of a factor,
Hmm.
depending on what they're purchasing, right, and how much they're borrowing. But you knew you had some more room, even at, and I guess here's the other thing: you're not all that distant future or past. Interest rates just were stagnant; they just stayed there. They kind of
Yeah.
just um, were a level across the level. So didn't really rise that much, but so it's just definitely something to pay attention to. So we kind of covered that. That's where it spells out your interest rate or what you can qualify for. Um, line 70 all the way through 84 here, this block of verbiage talks about mortgage financing contingencies. And really what it is, there's a couple of different options here. Is if the buyer, there's actually should be, yeah, we got those. Um, so the first one, if a buyer cannot secure finances specified in the purchase agreement, this purchase agreement does not close on the specified date, this purchase agreement is canceled. Buyer and seller shall immediately sign a cancellation, and said cancellation directing all earnest money back to the buyer or forfeited to the seller. So this basically is talking about the earnest money and what happens if they cannot secure financing and financing falls through. So if typically what we'll see is that, and you can do it however you like, but I believe, and I correct somebody if somebody could correct me if I'm wrong, but I believe coming up and going through a purchase agreement, there's over 178 decision points on a purchase agreement, meaning like this could be checked, or this could be checked, or this could be checked, bouncing back in favor or not in favor for one party or the other, if that makes sense. So it does matter which block or which box is checked on the purchase agreement. So it is very, very important. But this indicates that if a buyer cannot secure financing, right, what would happen with the earnest money? Typically, if this first one's going to be checked, buyer's agents will try to have this one checked, refunded to the buyer, right? They could choose to say, you know what, nope, I'm gonna sell it up or make my offer that much more competitive. We are gonna, even if we don't secure financing, we're gonna forfeit our earnest money to the seller. It's entirely the buyer's option. Okay. Down below, buyer shall provide seller or licensee representing the seller with a written statement. So this line 78, meaning that if that box is checked, that typically I like to do this because there's even being on the buy side and representing the buyers is because it makes everybody honest. It puts a date out there in the near future, and whatever this date might be, whether it's a week before or 3 days before or two weeks before closing, right? It says buyer shall provide seller, obviously the buyer's agent will, via the lender or licensee representing, assisting the seller with a written statement on or before such and such a date. Meaning that for the purpose of the kinship, a written statement means preparing a buyer's mortgage originator or letter after the final acceptance date that the buyer is approved for the loan. So what does that look like from your point of, because really this is originated from you or your your president or your from the bank, that yep, we're good to go. So you want to touch on that a little bit, Justice, as far as the lender written
so
statement?
it's kind of funny. This is one of those lines where typically most agents, especially if it's not one you work with, they just put a date in there and don't let, as a lender, they don't let us know when we're like, oh, there's a written statement date for that. So sometimes we get surprised where it's like, that's in 2 weeks, like, so sometimes it can get a little hairy with that. But yeah, essentially on our end, the way we look at a written statement is that we're guaranteeing that the loan will close with all our knowledge base of it. I have a caveat written in my written statements just because this happens every once in a while where a loan will get set up for pre-audit. And so then, sometimes there's needed stuff. And so, or every once in a while you do a written statement and it'll say subject to appraisal because we haven't got the appraisal back. Because there was a time, during COVID where you were really lucky if you got an appraisal done in like 20 days just because of the way the world was. And so it was kind of like you give these written statements and say like, we're good. We're just waiting on this appraisal. So then everyone just kind of knows we're good other than that. So that's kind of how we view it. And the bank, the bank puts that on us as loan officers to know our stuff, know our client, know our file.
Right. And the dates. And the other part about this is once that written statement is given to the listing agent, i.e. the sellers, right, and conveyed to them, And it says, yeah, they are approved if the buyer does back out after that. That's where there becomes a discrepancy of forfeiting their earnest money at that point in time, because this is truly a hurdle that we got to get over, or a contingency that kind of it is and it isn't, right? But once it's provided, and if the buyer were to back out, well, they could have the potential of losing their earnest money, and most likely
Mhm.
would. So um, we're going to keep moving because there's actually 12 pages of the purchase agreement. So try and get through this a little bit quicker. Once again, the date of the purchase agreement, the property located at, and that's the address. The verbiage here, 93 through 113, talks about cancellation, some of the things that we're just kind of talking about, but that's found on every standard Minnesota Association of Realtors form. Once again, boilerplate information. 114 talks about locking the interest rate, right? Now, obviously, you can't lock an interest rate until you get a purchase agreement and it's agreed upon. But how and when does that happen? That's what this spells out in this block, right? So within 5 business days of final acceptance, or at any time prior to closing, as required by a lender. So one of those two X's or box would be checked as far as at the discretion of the buyer of how they want to do that and what's acceptable to the seller. Lender commitment work orders, 118. So, this is typically going to be for FHA or VA. Have you seen, Justice, from your perspective on lender commitment work orders? I just haven't seen them come up very often.
No, they don't come
I
up very
have in the
often at all.
past, but it's been a long time. So anything you can want to share about lender commitment work orders? And that's
Yeah,
that's
I mean,
originated by the appraiser, right?
yeah,
Talk
yep. So
about
the
that.
appraiser, yeah,
Yep.
I've had a couple in the last couple years. I've only had like a couple, and they mainly usually
Okay.
show up on FHA
Yes.
loans where
Yes.
it's like a railing needs like fixing, or there's peeling paint, or you can sometimes see it in the winter around here with septic. Um, and so the
Right.
appraiser points that
Yep.
out, and then usually it goes through something called escrow, where they hold money aside so that way the repair can get fixed and whatnot. But otherwise, it's overall based on all the loans, it's kind of uncommon.
Right. But it's an FHA, traditionally an FHA. You don't see this come up with conventional. Certainly, yeah, you just don't see it.
The
And
last one I heard with conventional actually was a one of my business partners last 2 weeks ago. He got one because the house had a trailer in the backyard that was kind of fixed but kind of not, and then it had like a porch
oh,
set on it, and it wasn't necessarily from the appraiser but more or less from the county, because we think that
oh,
the county wasn't happy that this guy built some stuff without permits. So they were required to take
that
down
never
this.
happens.
Yeah. So they're required to take down this porch and do a couple things
Okay.
just to make it go,
Okay.
but again,
Huh.
that's a one-off, so not common.
Right. Okay. Well, so that's what this addresses, and that's what this talks about. And seller agrees to pay up to, and a dollar amount should be put in there to make repairs. And that's what addresses that portion. 127 here, seller or buyer agrees to pay reinspection fee. What that talks about. So if there are work orders that are called out in whatever capacity, this is spelling out ahead of time that if that does happen and there's work orders, well, the appraiser or the city, like you had mentioned, somebody from the city has to come back out and sign off on that, right? And they say, "Yep, now it's taken care of. We're good." Well, typically, what it's saying here is they're not going to come out for free, right? And there is a fee, typically, whether it be 150 bucks, 175 bucks, 225. I don't know. Like I said, I just haven't seen commitment work orders as of for quite some time. So what that fee is, I don't have any idea ballpark for you that you've
Uh,
seen
I've
for
seen it
reinspection
around
fees.
150, 175
Yeah.
for them to come
Yeah.
out somewhere in there.
Right. Okay. Yeah, and that's pretty standard. So and hasn't changed a whole lot with pricing. FHA escape clause. And once again, this, as it says, it's only for FHA financing. So what this is referring to is the appraisal, and that the appraisal price, the sales price, that it has to appraise for not less than, and typically the dollar amount that's put in here is the sales price, whatever is agreed upon above. And so that, and I will keep going, but that has been a big one. Appraisal gap clauses. I think 5, 6 years ago, you never even knew what that term was, or what it even meant, or never came into play into an offer. But now that is a thing, and it has been a thing, and I think further on down we can talk about it. But this is specifically to HUD or FHA or DVA, Department of Veteran Affairs, for people that are eligible for VA loans. That the appraisal must come in at or above the sales price. Otherwise, that's what it talks about. That written statement and cancellation, and some of the other things. So, and earnest money would be refunded to the buyers automatically on that case. Page 4, once again, the date. Every page has a date, and it has a property location address, addressing to the right to the specific property, so that if these sheets ever get separated, you know that this is a part of the same purchase agreement. Lender processing fees for FHA, DVA financing only. Maybe, Justice, if you want to touch on this space, 140 through 144, or even down to 146. What do you see, or what do you like to see for processing fees? Because that's really more in your realm. What can you share about this
Yeah,
this section?
I have never seen a seller cover a buyer's funding fee or FHA funding fee. So in government loans, FHA, USDA, and VA, you have a funding fee. So think of that as like a cost to use the program. It gets tacked on to the end of your mortgage, and then you also have different mortgage insurance requirements and whatnot. Yeah, I have never seen a seller at this point. When the market flips, we might start seeing that again, but never seen a seller agree to pay any of that. Now with VA, it can be waived if you have, if you're exempt based on your DD 214 and your
And
eligibility and whatnot.
disability. That's a
Yep,
disability. It's a entitlement through your disability.
yep. So, but with FHA, there's no
Your
getting
funding
out of
fee.
that one.
Right, but for service members that are eligible and have exemption for, depending on a disability rating or there's other ways, but primarily it's a disability rating, and then therefore you are exempt from your funding fee. So
Hmm.
that's always a good question for agents, and or if somebody that's in the service, they want to know. And if I mean, you'll know if you got a disability rating or service connected disability, you're going to know, and there's
You'll know.
different
Yep.
levels, right? We sure love to talk to any veterans out there, because I being one, I'd love to work with any veterans to be able to help them purchase and use their entitlement and buy VA. It's, in my opinion, it's one of the greatest ways to buy, because of the no mortgage insurance, right, and what have you. So, and potentially no funding fee.
Hmm.
So depending on the individual. So moving on, selling on to 159, excuse me, is a seller contributing to buyer's closing costs. This one has not come into play. Not to say it can't. It's on here. A seller can allow or can agree to pay a buyer's closing costs or a portion thereof. It's just with the market the way it has been. Escalation clauses. We'll kind of talk a little bit about that.
Rare.
Appraisal gap
Rare right now.
clauses, multiple offers. Some of these things, if for anybody that's just getting into the market, these are familiar terms now, where in the past a lot of them were not. It's just, it really depends, and that's why the evolution of the market, right? And us doing this, it's always changing, and these are terms and things that are right now happening in the market that people will become, if they're not aware of them, will become very aware very quickly, especially if you're on the buy side and you're trying to make an offer. And the professional real estate agent and or lenders will bring you up to speed pretty quickly of what's going on with the market. So so those are some things that are that we've not seen. Sellers contributing to buyers' closing costs. Not saying it can't happen. It's just trying to compete because every little thing, every one of these items that are checked, like I said, makes a difference for the buyer or the seller, for you as a buyer or for a seller. And so anytime you're trying to be more competitive, um, you definitely, those things take away from your offer. So, but you can, is or is not contributing to buyer's closing costs. So if you're asking a seller to pay for some closing costs, which in the past it has happened, the thing, you can put either a dollar amount or a percentage, and that's how it's calculated and just kind of spells it out to the effect. Moving down to 169 inspection. This is another one that never would I advise someone, you can't get a home inspection because absolutely it's your right. The market as such has brought to where competitive offers, there's a lot of buyers nowadays that are willing to skip the inspection, and that's where it spells it out on line 170, that they choose to decline to have a property inspection. Right, wrong, or indifferent. That's just kind of where we're at in the market. Anything from a lender side or liability side, I don't know. Anything you want to touch on home inspections, but that's just what we're seeing now. So it's either, so you can either elect or decline. And then down here, purchase agreement is or is not contingent upon the inspection. So somebody could have an inspection for their own well-being or knowledge, right? And then pretty much be willing to accept on or take on any of the items that are found by the home inspector or whoever you choose to have do the home inspection for you. But it doesn't have to necessarily be contingent. And that's what line 170 172 spells out. Either it is or it isn't contingent upon that inspection. So it could be just for your knowledge. Anything you want to share about home inspections or some of that as far as from a lending side? Is there?
Yeah, yeah. Some clients sometimes think that it's required on our end, and it's definitely not. I just explain it to them, to clients, as think of it as an insurance policy for you, so it's not required, but it can help you
Right.
determine what's going on with the house and figure it out. Yeah, and in this market, I've definitely seen not a lot of contingencies tied to it, so they click decline even if they're going to have one. Some have it, and then they have it be pass fail, and so it just gives it a little bit, that lets the seller know, like, hey, I'm not going to be asking for repairs. It's just either it's good or like, oh, the foundation's cracking, I'm out of here. Um, but
Right.
yeah, a
Right.
lot of declines lately.
Lately, and and that's just kind of that's a whole nother topic to definitely investigate and to um risk factor of what you're willing to take on. A lot of times you're seeing people that don't do home inspections. What they'll sometimes do is also tie on or put on or potentially add a home warranty. Now it doesn't guarantee, and the thing with a home inspection, it doesn't guarantee anything anyway. It gives you a peace of mind. It gives you a snapshot at a time and place of when that home inspector or whoever's doing the inspections there of, hey, this is what it is, right? And so either and it brings awareness. So it doesn't guarantee anything. However, it does give you the knowledge or a better, base to say, I'm comfortable with this, or I can take it on, or I don't. This is just way over my head, and that's where allowing or having the opportunity to have a home inspection that is a contingency, and until all contingencies are removed, you're not moving forward, right? That's kind of the hurdles that we talk about that you got to get removed or get past or jump over. And then once you're over them, you keep moving forward, but not until. So down here, 179, seller does or does not allow perform intrusive testing or inspections. I'm talking about digging in behind walls and some of the other things is really what that commonly refers to. So pretty common that people do not dig into walls or have inspectors, and a lot of times that's trying to find dampness but there's a lot of great equipment or technology to be able to find moisture in walls and some if it potentially is a concern of that. So page 5, once again, date, property location is put into the purchase agreement. And then here it talks about line 185 is the true indicator. That's within so many days. If you are allowed and is agreed upon to allow for a home inspection for the buyer to perform a home inspection, here's where you put the number of days to perform the home inspection. We're talking about all inspections. So there's the home inspection. Another one that's very common and buyers absolutely have the opportunity to do is a radon test. That's another test in its own right, but that would be done in conjunction with the home inspection, and so that's another inspection that can be done. So certainly talk to your agent or professional about the ins and outs of radon and what that comes into play of living in a home. 194, other inspection items. There could be other inspections, termite inspections. There's many other things that people choose to inspect or how they choose to inspect. Oftenly, if you are going to have a radon inspection, it should be indicated or written out to let the sellers know, yeah, we're going to have a home inspection, but we're also going to do a radon inspection. Versus having the home inspector all of a sudden show up and say, hey, we're going to put a radon testing kit in your basement, because most likely it's going to be in the lowest level of the home, and it needs to be in there for up to 72 hours, right? And so without windows being open and large drafts and or just common use, and it takes readings. So and there's a number of different types of radon testing equipment. Sun Nuclear is the most common, or I think most accurate. I think that on the residential side of what most inspectors rely on, or the type of technology they use for radon tests. Talking about home inspections, and we'll continue on here. Sale of a buyer's property, once again, another type of contingency tied to the purchase agreement, but is that whenever you perform a home inspection, just know that there is a cost, and that's a buyer's cost, right? Now, for a typical home inspection. The other thing that is not here, and we'll potentially cover it later on, it'll come up, is there's well and septic. Those two can be inspections, and we'll talk further about that as we reach them down here in the purchase agreement. But so just know that whenever you do these types of inspections, typically a home inspection or a radon test, that's going to be a buyer's expense. You will not be reimbursed for that. That's just know that it's your peace of mind. It's your ability to have a third party to look at the property and say, hey, this is this, or this is what you're dealing with. So I always like to point that out to people, because there is an expense, and even if you ultimately decide to back out of the purchase agreement, you're not going to be reimbursed. You're not getting that money back. I also tell people a home inspection is not used to get at the seller as a way to negotiate. However, items can be negotiated after a home inspection as far as repairs. There's no question about it, but it's just, it is what it is. It's really for peace of mind, quiet enjoyment, safety, health and safety issues. That's really what I feel the bar level for home inspection should be. Moving on to sale of a buyer's home. So this is a big one. This is another, whenever you're entering into a purchase agreement, whether or not a seller is going to wait around for you to either put your home on the market and sell it, or if it's already on the market, if you've got a purchase agreement that's already been accepted and kind of went through this whole process already and just waiting for the home to close. So that's what this area, or this section 200 through 213 talks about. Is that the purchase agreement is subject to the addendum, the sale of a property contingency, meaning that number 2, this purchase agreement is contingent upon the successful closing of a buyer's property. So to buy the next home, you have to sell a home to make that happen. So that's what this is saying, and that's what it's spelling out here. A lot of times, number 3 is a better option if you can get there, or if there's a way to do that if a buyer represents that the buyer has the financial ability to perform the purchase agreement without the sale of another home, it just helps the seller to know that there's not going to be another property or potentially another property, what we call domino sales previous, that have to happen before this sale will consummate. So if you can get to this point, or if you don't have another home to sell, it always enhances your offer, if you would. I'll stop there. Any questions or anything here, Justice, with that?
No, yeah, no, we're just not seeing, yeah, scroll up just slightly.
Scroll up.
Yep, just
This
slightly
way?
here. Yep.
Yep.
We're not seeing a lot of ones and twos, just because we're trying to find ways for clients to buy the home without having to sell theirs. And that's a little thing I'll touch on when we're done with this purchase agreement, which is called a recast or a bridge loan.
Okay.
But yeah, we're the key thing to get kind of clients right now get their offers accepted. So we've even had some clients, you and I are working with one right now, where they sold their current home, moved in with mom and dad, so that way that they could purchase their next one non-contingent.
Yeah, we'll be checking this third block once
Yep.
their home's sold and they have the cash and they're good to go. They have no other home to sell. So yeah, so we'll keep moving forward. Real estate taxes, special assessments. This is entirely negotiable. So either you prorate from the data closing for both parties. Traditionally, that's what you're going to see, but any of these blocks can be checked. And line 221, this is what this talks about is in the state of Minnesota, and I think many other states, there's the homestead exclusion, right? And that's whether or not looking on the tax rolls and the tax records, if a home is considered to be homestead or not, meaning that somebody's lived in the home for the previous year, and it's in that category or classification versus non-homestead. It might be investment property that somebody or rental that somebody's selling, and typically that's where you're going to see the difference in the designation of non-homestead. So what this 222 or 221 indicates or jostles back and forth is shall or shall not pay the difference between homestead or non-homestead, and that referring to the type of category of taxes it's currently in on the property. Deferred taxes, this talks about, you've got special assessments, deferred taxes on these. So once again, who's going to pay it, buyer or seller, and which way do those go? So depending on how that's negotiated out or looked upon, either one of those sides could be checked. 241 talks about has or has not received any major improvements or notices from assessing authorities, right? And this really kind of comes up a lot with curb, gutter, sewer, some of those things. That's what this is talking about here. Okay. Additional provisions, 251 talks previously executed purchase agreement. Sometimes people will have an accepted purchase agreement and the buyer is, for whatever reason, whether it's due to an inspection or cold feet or what have you, but they've entered in, the buyer and seller, a previous buyer and seller have entered into a purchase agreement, but they've not canceled it yet. And so what can happen is that an agent can put it back out there, but it needs to be subject to cancellation of a previous purchase agreement, right? Because you can't be entered into or agree on selling a property to two different people at the same time. So that's what this is referring to, that if there was a previous purchase agreement that's not been canceled out or executed in the terms of being canceled, that's what this is talking about. Is or is not subject to the cancellation. Just making people aware that there's other items going on there. Deemed marketable title, 258, 259, warranty deed is the most encumbered or unencumbered, I should say. It's the best type of deed you can get from a seller. There's other deeds though. There's, as it states here, there's personal representative deed, contract for deed, there's trustee deeds, and or other. So there's many different ways in which a seller can convey title to a buyer, and that's what this refers to in this section here. Um, line 271, possession, the all important, hey, when do I get my house? You know, I just went to closing, and sometimes, most of the time we're going to check immediately after closing. This is the way I like to do it. I don't like to have a holdover clause or a rent back or some of the other things where the seller needs time to get out. The biggest thing is, or the most cleanest, best way to execute this transition of the possession, if you would, is immediately after closing. So you go to closing, buyer brings their money, the funds are there, they get wired or whatever, and through the title company takes care of it. But then they would cut checks to the seller. Seller's getting their money, and once all the documents have been signed and executed, the keys are handed over to the buyer. Everything's good. The dots are, I's are dotted and the T's are crossed. And then immediately after closing is when the buyer can go back and it's your house. You know, congratulations, Mr. and Mrs. Buyer or whoever. You've now just bought your new home. So the other is referring to potentially a rent back or some other different things. Talks about all debris and personal property not included here in the personal B possession date. So it's swept out, and it talks about some of the things, just, you know, cleanliness, and how a property really should be delivered or handed off to the new buyer. So 283 all the way through down is title examination, dealing with you know, the abstract or just updating title. That's what title companies here in the state of Minnesota are predominantly do. Lawyers do. So it's title examination, making sure that there's free and clear title, marketable title, and it comes without encumbrances as far as that goes. Subdivision of land talks about some boundaries, access, mechanics liens, notices, dimensions, access agreements, making sure that you're all allowed to access the property. Not always is there boundaries or accesses, but making sure that the potential buyer knows, hey, where are the access and what have you. So that's what this talks about. I'll take a break. Any questions or anything there? If not, I'll keep going. Justice?
Yeah, no, this is all the stuff that I boilerplate played over when I get these purchase agreements.
Okay, okay. Risk of loss. And you're right. I mean, these are pretty. There isn't a whole lot of, as you see on this section, there's a whole lot of blocks to check. So it pretty much, as you read it and understand it, it tells you what's going to happen, right? Risk of loss of if a earthquake, vandalism, flood, you know, act of God, the rise of loss. Sometimes, I mean, while you're from the time that you sign a purchase agreement until you actually go to closing and take title, or, you know, you own that property, something could happen. And that's what this section talks about. How do you deal with that, and canceling the purchase agreement and or moving forward, or dealing, you know, agreeing for more time to deal with potentially the seller's insurance company, and potentially getting some things fixed or what have you. So that's what this talks about. Time is of the essence. In other words, you can't just leave it out there and either party. You got to keep it moving forward at an honest fashion. Calculation of days. All calculations, they begin the first day, calendar day, or business days as specified. So there are different business days versus calendar days, and like the home inspection are different items. It talks or tells you that's calendar days versus business days. And holidays, how they affect and come into play. So calendar days include Saturdays, Sundays, and state and federal holidays. Okay, for the purposes of the agreement, any reference to days means calendar days. So it's and that comes into play for your home inspection, and when you really have a timeline to know when things, you know, need to be met. That written letter, for instance, that's another, you know, calendar days or whatever days put in there. So. Moving forward, we'll go all the way down to default. Not much there to talk about, but predatory offender and offender's information. So this is really a buyer beware and awareness portion of the purchase agreement that buyers should know about and have the right to be able to investigate on, you know, to go on the Department of Corrections website and see and really kind of, it will show you who registered sex offenders or different offenders are within this predatory offender information. So you can go on there and feel free that to access that website and knowledge. And I always point out to any buyer that if you have any concerns, always go in and do your due diligence, and you have the right to go ahead and check out that information. 359, buyer has the right to walk through any property prior to closing, establish the property is substantially the same condition as the date of the purchase agreement. So that's what that talks about as far as that. And most buyers typically are going to want to go back in right before closing. So I always let sellers know that, hey, they're coming back through before to make sure it is what it is, right? And that it's in the same condition, because a lot of times from the time they wrote the purchase agreement until we actually the day before closing or the morning of closing, I mean, it could be 30 to 45 days like we talked about. So they want to go back in and make sure before they go sign the papers, yep, we're good. Everything looks substantially the same as what I understand or what I remember it being. 362 and 363, there's different disclosures that can be offered. And this is a whole nother section. I don't want to take a ton of time with this, but there is some in-depth knowledge that needs to be had or understanding of seller disclosure. And that's really done with any seller that's lived in a property. The second one on line 363, seller disclosure, seller alternative, really is kind of a new animal in our industry. It's at least that I know of. I mean, it really came about. It never used to be, or maybe it was, but wasn't as predominant as it was about 10 to 12 years ago, when the industry, and we had a lot of short sales, and homes were being given back or foreclosed upon by banks, and they ended up with these homes that they never lived in, they didn't own, or they owned it, they had an interest in it, but they didn't live in it, right? And so therefore, when it came time to turn around and put that property back out on the market, a full disclosure and the lawyers thereof felt that it probably wasn't in the best interest of their clients or sellers that have never lived in a property to disclose information about a property they really didn't have information about. And so that's why this second alternative is seller disclosure alternative. There's a lot to this. I hate to skim over it, but really work with your professional and really understand this portion of it, because this is the portion where it really pays to be honest, to be forthright. What's the best way to disclose? What's the best way to share with the general public? And in the same right, there's certain situations where you don't even have to utilize a seller disclosure if you're selling to a tenant that's actually been in the property, that something of that, or family members. There's different categories, right? Or what's the word I'm looking for? Exclusions that you don't have to provide a seller disclosure, but most of the time, yeah, you definitely have to provide some form of seller disclosure that needs to be provided. And there's different levels of how these seller disclosures are used, whether whether somebody wants an as is or they don't, and which one is appropriate one to use. Speak with your professional, and they'll be able to guide you through that process of which one needs to be used in the different situations. And then moving on, it has received inspection reports required by municipalities. There are what's called point of sales and truth in housings in certain cities throughout the metro area and other cities as well. And so that's what this is referring to. Is there a point of sale or some of those things? And those need to be, and your professional, once again, is going to know or should know what cities require those point of sales or truth in housings, and what has to be done with that. So that's a whole nother topic along that. That's why I say disclosures are pretty a depth subject. So definitely don't just skim over it and pay attention to that whenever you're selling, because it really does matter. So 372, so moving on, once again, here's another inspection that we talked about: water and sewer, right? Septic, whether it's city water, city sewer, the appropriate box would be checked, or if it is a private sewer or private well. That's where these are checked. And along with these, the inspections could be requested or required. What about that, Justices? And this one's kind of a whole nother, there's a lot to this area as well. So you really want to pay attention to this whenever you are selling. It's not as imperative to know all the ins and outs when it's city water, city sewer, because it's governed by the city. But when it's private well, private sewer, becomes a much bigger deal. Anything, I don't know how much we want to go into that, but that definitely, you want to pay attention to this area as well, whenever going to sell a home and buying a home. So anything you want to share about that or talk about a private well or septic?
Yeah, the quick thing is septics on our end, depending on the loan and whatnot, need to have like it needs to be up to date, and if it's not, then it needs to be
Yeah.
essentially fixed to get there. And then that's where I talked about earlier about, the potential winter escrow because you can't really get
Right.
to the septic or whatever if it's winter time, so you gotta like hold out and wait for that.
Can't
But
do the work, right?
right, yep. So sometimes that'll come up in those instances, but
Yeah.
yeah, for the most loans you won't see that because they're city purchases.
Right. Okay. But that too, once again, is a great area to really pay attention to, and there's a lot more than we're really covering today about private well and private septic. So, 388, here's the home warranty. Remember how we talked about, well, if we choose not to have a home inspection, well, maybe we want to add a home warranty. And there's a lot of different good home warranty plans, that will get a buyer into a home and cover a number of things. For the first year, you can have them for a year, for two. There's different options, different plans, different things where that home warranty companies offer, to, if you were to have repairs or need repairs or things that come up. So that's what this is, and talks about that will be added or not, as a part of the purchase agreement, who pays for it and at what cost. Or down here it says no home warranty will be included. 396, this is just an agency. This does not satisfy Minnesota statutory agency disclosure requirements. But it once again is another point on the purchase agreement so that people understand who's who in the zoo. I say that a lot, but it really is true. Knowing who the players and who all is involved in the transaction, it's kind of spelling out and just sharing, once again, touching on it, that, if you're working with the selling agent, their name, the company that they work with, right? And then here if a buyer's agent, their name, and then the company they're working with, and it just kind of who's the agents involved in the transaction, who they're working with, and on whose behalf. Um, Further down, it subsequently talks now about type of agency representation, whether it's dual agency or not. That once again is another how someone can be represented. I don't want to go into the details of that, but that's definitely something that should be talked about upfront whenever you start to speak with a real estate professional, and as far as how you will be represented and how other people are represented. So that's where the whole who's who in the zoo, who's who and who do they represent and who can I tell what to and where their loyalties lie. It does matter. So work with your professional to ask, and they should be bringing this up with first subsequent contact. So it definitely should be coming up early in your conversation as you go down into this journey. But that's what dual agency is or is not. I mean, basically, dual agency can come about two ways. It's if a one agent represents both a buyer and seller, that's dual agency. Or if agent is currently working with a seller, and then no, I take that back. So one agent's working with both sides, right? By the sellers or the buyers. That's dual agency, and you have to
Mhm.
agree to it, and it is allowable. I know a lot of states throughout the country are not allowing it anymore, but we still do here in Minnesota.
I have one in
And then
process right now.
the second way. Go ahead. Go ahead.
I was gonna say I have one in process right now.
Yeah, yeah. So it does happen. It can and does happen, but both parties got to agree to it, right? The other way, real quick, is that if um, two agents that work in the same brokerage or have their license held under the same brokerage, work for the same office, they'll represent two different parties. One agent with one firm or one agency represents the buyer, and another agent that is within that same brokerage or agency represents the seller. That too becomes dual agency, and that's another way that dual agency comes about. But once again, definitely have that conversation with anybody that you're working with, and so that you fully understand who's representing who. More boilerplate, FIRPTA, this is 429, foreign investment. This never used to be a block or an item on a purchase agreement, but seems to have come up for any foreign investments or people that would typically or might end up owing taxes on for whatever reason and then sell a home. There was, I think, so some sellers and or title company are typically new buyers stuck with potentially some tax ramifications that weren't paid by a seller and then get imposed or become a lien on a property. And that's what this is talking about. But once again, another somewhat in-depth topic, but if you have questions about that, definitely ask and dig into that a little bit. Talks about fully executed purchase agreement. To be binding, the purchase agreement and all addenda must be fully executed by both parties and copies must be delivered. So whenever you hear the word executed, it simply means that the purchase agreement is signed and delivered, right, and agreed upon but with both parties, meaning both the buyer and the seller. They've received them and they agree to it. So that's an executed purchase agreement. Further on, it does as we progress and technology evolves. Electronic signatures are legal and binding. So a lot of times we've got Authentisign and some of these other documentation signing platforms that we can send, and people can literally sit on their phone or on their laptop or their desktop, and they can sign, go through, read these documents, review them, and sign them. And it is considered to be legal and binding. So just know that. Trying to think what else. Nothing really else down here. The addendas. So I won't go too much into, but these are some of the different types of addendums that can be included with a purchase agreement. In addition to buyer move-in agreement, I talked about that. Not a big fan of moving in early or a holdover or what have you. Buyer to purchase as is, limited the seller liability. We kind of touched on that. That relates to your seller disclosure and which one can be used or which one can't be used. Townhomes typically are going to have your cooperative common interest community, CIC docs, and that's a contingency, and there's a review time or process or period. Typically, it's 10 days for a buyer to, once they receive any CIC docs, right, from the listing side or the sellers, they have that time to review to know that hey, the bylaws, the rules, and the regs, and some of the other things, because you are moving in with other neighbors, and you all have to commune, if you would, and cohabitate in a certain area. And so those common interest community documentation, you have the right to review them of how you're going to be dictated of the things you can or can't do within that community or within that townhome or condominium of where you live. Contract for deed, different type of financing. Lead-based paint, we didn't touch on this, but lead-based paint, any pre-1978 home could or could not have potential lead-based paint, and that's what this refers to. Anything beyond that, newer than that, this does not come into play, but anything older than 78 or older, this document needs to be included into a purchase agreement, and also pamphlets given to buyers so they can read about potential lead-based hazards that could be in a home. So sale of a buyer's property, we talked about that. Rent back, touched on that a little bit. If a seller is going to stay there and they're going to rent it back from a buyer. Talked a little bit about seller's purchase lease contingency, if there's leasing, what that looks like. Short sale contingency. Boy, this was a big one number of years back. Haven't seen too many of them. Don't know if they're going to come back or not. Hopefully not. But I think with a lot of people with the equity that they have now, I just don't see, unless something drastically changes, Short sales are a thing of the past for now. Doesn't mean they can't ever come back or become a thing again. It's just not common in today's market today. And then the addendum, if there is a sewer treatment or well inspection, we talked a little bit about that as far as what that looks like here. If the buyer's asking the seller to provide a sewer treatment system inspection and a well inspection contingency or inspection, that's where this would be checked, and that would be a part of the purchase agreement. Okay. So final page, we've made it to page 12. So I thank you for hanging in there with me. I know it was long winded and kind of rattled on here, but there's a lot of decision points on a purchase agreement. That's why, it's kind of fun to cover this. I don't know how many people or who all have ever shared this, and hopefully somebody that watches this, those of you that might be watching, get some value from this, because there's a lot here, right? There's a lot of moving parts, a lot of boxes to be checked, and so hopefully there is value and benefit from it, just to become familiar, right, and have that understanding. Hey, this is what a purchase agreement looks like, and this is the instrument that conveys title and conveys the ability to be able to purchase. It's not what conveys title, but a deed does. But it's a part of the documents to do that. Anyway, so FERPTA, this talks about that foreign exchange and some of that. Either they are or are not a U.S. citizen, resident alien, different statuses, because people can own homes that are not U.S. And some of these non-resident or alien or different statuses. So that's what that talks about. Down here, 503 through 508, that or 506, these are the buyers and sellers' signatures. They're dating it and signing it. Yep, we agree to the terms above, and we're going to keep moving forward. And here's how they do that. Final acceptance date. That's when going back and forth. This does matter, and specifically what this derives or goes back to is the home inspection, because you need a final acceptance date. What is the final acceptance date of the purchase agreement for any inspections to move forward thereof? And that kind of sets the precedent or the watermark or the level. And all right, this is the date we're basing everything off. You've got so many days to do this, whether it be the home inspection or the CIC docs, we got 10 days to review them. Well, when did that start? That's whatever date is put in here is the date at which from it starts and moving forward of how many ever days. So this is arbitration. Arbitration is a whole nother animal that I don't think we're going to get into, but I definitely want to know about that and read about that. And it's basically a way in which buyers and sellers can predetermine a way to resolve any discrepancies that may come about later on after buyers. And typically where you're going to see this and that's why I say or exposure to potential buyers, because that's where arbitration comes in, right? It's if someone doesn't disclose freely and honestly, and or if a buyer feels that they've tried to hide certain things, that's where this is going to over some type of compensation, if you would, for feeling that they were not told honestly about potentially something that could affect the way that they use that property. So that's where, so just pay attention. Arbitration doesn't affect the purchase agreement, meaning that you can agree to it or you don't have to agree to it, and all the terms above will still be full in effect and enforceable. It's just a way to resolve any disputes later on that you agree to either go to arbitration or not go to arbitration. It's a way that I think the real estate industry has found to keep disputes or discrepancies out of the court system and not to clog up the court system with these types. And we've found a way to remedy or come to some type of agreement or conclusion later on our own. And it's just another avenue to be able to do that. So that's what arbitration is. Here's another form in the last form. This is page 13, but it's been added to and you'll see this come up, wire fraud. And it's just too bad that we even have to talk about this, but be cognizant and be very knowledgeable or aware There's a lot of scams. Haven't heard of it
Mhm.
lately, but I have in the past, to be honest with you. And I don't know how they get the information or how they even are, could even send a wire. But yeah, it's just interesting that this is even an issue, that wire fraud. But excuse me, just know buyers and sellers and tenant, are advised never send or wire funds unless without strict instructions. So that's what this is talking about. It's really kind of a disclosure, but and sellers, you shouldn't have to be wiring or sending money anywhere. Anyway, it's really upon the buyers to bring money to closing. So that's just one more form that's just been added recently, just an awareness thing that don't let anybody ask you to send money, especially if you're a seller, and just work with your professional as a buyer of either bringing a cashier's check or wiring funds to the title company or what have you. So that's what I've got. Justice, are you still there? Or did I bore you to death, put you to sleep?
It's
I
helpful. It's helpful to
apologize.
go through this.
I knew it was going to be somewhat of a lengthy one. Like I said, I hope there's some value, but I'll let you. I can stop sharing my screen and stop with all that fun stuff and take a look at your happy face and see
Yeah.
what questions, if we may, or what we got. So that's what
Yeah.
I got for a purchase agreement.
Yeah, I think that's good to cover because again, not a lot of people I think would go through that line by line like that and give that kind of information. And if people are really curious about it, obviously they would meet with you and you do that in person. But having this as a resource for them to go through is a good thing.
Yeah,
I
hopefully. I mean,
think,
there's a lot there, as you can see, and I don't know, I
yeah.
didn't time it. How long we were there, probably a little longer than most people would like, but for those that are going through the process, I think that there might be some value there to really, hey, you can lay in bed and watch the video and just listen. And
Yep.
then, it'll bring out some tips, tricks, or ideas, or just points. Hey, I got to think about this, or just jog some things, bring them to the surface. So hopefully,
Hmm.
it'll do that for some people.
Yeah, and obviously they know how to reach out to you if they have more questions on it. Scott, do you
Hopefully,
have anything else to add to today's episode?
you know what? I'm done.
Yeah, you're done. Get that water. Tell the people what they should do.
Hey, like our channel, subscribe, like our channel. We always love that. Yeah, there's great value in doing that. So hopefully, um, yeah, that's all I got, Justice. I'm gonna
Yeah,
quit. I'm gonna end there.
yeah,
I'll
you're
let you
done
say
now.
your piece and thank everybody for sticking with us and watching.
Yeah, yeah. So thank you very much for watching and listening to the Evolution Real Estate Podcast, where if you're staying up with it, it's always changing, ever changing. So we'll catch you on the next one.